Property Pulse, the industry insider's view of the real estate market.
On Dubai Eye 103.8.
Property Pulse is a new show within a show for the Business Breakfast. Every Thursday morning, we're going to be getting the industry insider's view on what's really happening in the Dubai, the UAE real estate market. Our two experts this morning are Lukman Haji, the Chief Commercial Officer of Property Finder. Lukman, thanks for staying with us.
Great.
And also this morning, Abdullah Alajaji, the Managing Director of Driven Properties here in Dubai. Abdullah, good to see you. Thanks very much indeed for being with us.
Pleasure. Thank you.
So, we've got lots of messages coming in, including some, and it echoes a point that Malcolm made, saying, your thesis, Abdullah, is now is the right time to buy. But people are saying, but with the lack of a permanent residency for property owners here in Dubai, what's the incentive for an expatriate? You're kind of half an expatriate. You're a Saudi national, so you're not Emirati,
yeah.
But GCC nationals, as we know, have special rights here in the UAE. So how would you respond to that?
Well, firstly, yes, you would get a residency if you buy a property of 1 million or more. You would get a 2-year residency in Dubai, which is an investor visa or investor residency. The government has announced plans to issue longer-term residency for larger investments in the Dubai property market, and I think that has been encouraging for a lot of investors recently to put in larger investments in the Dubai real estate market.
I think one of the issues with that, I had a friend who had one of those just slightly above 1 million, but the price fell down. They reapplied for the residence permit and they were told no, so they had to sell up and get out. The market needs more certainty. Do you feel that is coming, that is in the pipeline?
Absolutely. I mean, this is one of the things that I've actually seen recently, and I know that there is a legislation being worked on at the DLD level where if you had bought it at that price, regardless of where the market takes the property, you've invested this much in the country or in the city, you would still be entitled for that residency, regardless of what how the valuation works for your property going forward.
Well, speaking of valuation and property prices, we have a question that's come in from Balhul.
So I bought a place in JVC almost a year ago, and obviously the property value has gone down because that's how it's been happening. And since it's a very underdeveloped place, one of the things I thought was as it keeps developing, eventually the price would go up. So does that make sense, or would it stabilize, or would it just keep falling because it's just one of the cheaper areas in Dubai?
Well, JVC is also an area that we're heavily involved in. It's certainly still not fully developed. About half the area, or about 40% of the area, is still undeveloped. We obviously, as I mentioned earlier as well in the show, the more an area is developed and the less supply in the area, the more prices will stabilize. So certainly, if you have a longer time horizon, you will see an uptick in prices in JVC.
Earlier on this week, and about regulations to the brokerage model. One of the specific issues we were discussing was cold calling and regulations about that, and in fact we spoke to the head of the real estate regulatory agency here, Marwan bin Galita, about it. From your perspective, Abdullah, as someone who owns and runs a real estate brokerage here, where do we stand in terms of rogue agents in Dubai, or cowboys, as one of your competitors called them to me? Have we clamped out on that now, or is there still progress to be made?
We have seen a plethora of agencies flee out of the market only in the past 2 years, and that's thankfully to legislations and new regulations that are being implemented by the regulators. So that has certainly helped the market over the past couple of years, and in fact, with a number of agencies consolidating or even closing down in the past couple of years, that made the market a lot more transparent as well, which is encouraging sign that we see.
One person has written in about the off-plan market, and as we were saying in the first half, that it's estimated that around 60% of all sales at the moment are off-plan sales. But as the value of off-plan properties has gone down, simply because the market's gone down, is there a feeling that developers, builders are actually building the apartments to a lower spec, a lower specification than before, to try and save themselves some money?
Well, I've seen recently new launches or new handovers that came in at much higher quality than previous handovers, with the likes of certain private developers. They've had a new handover recently that's superior in quality to previous projects. We've seen major developers who handed over recently projects that are of similar quality of what they have. It's very difficult to see what's going to happen in the next 3 years of a project that was launched today. But with the prices coming down, also construction prices have come down. So I assume margins will still continue to be intact.
Now, you could show me a new apartment. I think, oh, that's nice. I like the colour paint on the wall. But actually, what I need to know is what's behind it. What is the wall like? How is the build structure? We don't seem to have chartered surveyors here very much to sort of come out and check out apartments here. It's not standard when you take a mortgage to do that. Do you think we need more support in the way of chartered surveyors or surveyors of buildings to go and look at everything that we buy?
In fact, we have seen a trend of chartered surveyors come in to this market over the past few months, and looking at property auditing, fully auditing a property, from a livability and usability perspective, and that has encouraged a lot of finance buyers recently to buy into the market.
I know when I got a mortgage for my place, the bank sent around not one but two surveyors before they'd lend me the money.
We've got one last question coming now from Eleanor.
I would like to ask a question related to a ready property in seaside, the first line of the sea, GBR, for example. Now the prices are dropped, but because the buildings are already old and it's next to the sea, due to the humidity, would the maintenance price increase for this kind of buildings? So if I'm an owner, would I spend more when I'm buying this property?
That's so interesting. If you do have a seafront property here in Dubai, and there's a lot of developments that will cover, is that more maintenance for the sea, the weathering, the salt?
I don't think so. I think whether you're by the sea or inland surrounded by desert, you're going to have some maintenance issues. The question relates specifically to JBR, which is, I think, 13, 14 years old now. There's about 3,300 units there, and it's a very mixed bag. Some owners have taken great care of them, and others have let them neglect. I think the general management by DP is pretty good of JBR, and I do think it's a good location, and prices are quite attractive. Having said that, there are more attractive, newer options just offshore and just around the corner. So it is facing stiff competition, and traffic there continues to be an issue.
It's been great having you on the show this morning. Thank you for joining us for the launch of our new show within a show, Property Pulse. First of all, the voice you just heard was Lukman Haji, the Chief Commercial Officer at Property Finder. Nice to see you, Lukman.
Great to be here, thank you.
And making his debut on the Business Breakfast this morning, Abdullah Alajaji, the Managing Director of Driven Properties.
Thanks for having me, guys.
Thanks, Abdullah. We hope to welcome you back again soon.